We are here today to talk about two very beloved semiconductor stocks, Texas Instruments and Taiwan Semiconductor Manufacturing. And I have a very special guest with me, Jason Hall from the Smattering podcast and YouTube channel. Jason, thanks for joining me. How's it going?
Nick, I'm excited about having this conversation.
I am too, and in doing the prep for this, I learned a few things, so it's already a win for me. And I think viewers are going to like this. So before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. Basis for this conversation, Jason, this is a rated G channel, so I'm going to read the edited version of your tweet. It was actually a PG tweet, and I'm just going to make it G. You said, your immediate reaction to seeing this comment that Texas Instruments is a stronger business than Taiwan Semiconductor Manufacturing, your immediate reaction was, oh yeah, I think I actually believe it too. So some might call that bold talk. Texas Instruments, a stronger business than Taiwan Semiconductor Manufacturing, the largest, most advanced semiconductor manufacturing company on the planet. Why do you think Texas Instruments is a stronger business?
So, it's funny because I made this tweet in response to the tweet that was out there, and I've been thinking a lot more about it since then, to really challenge my own bias. Do I really believe this? What is the reasons I believe it? And kind of what I've come down to, Nick, is I think, first of all, the analog semiconductor part of the semi value chain, I think, is grossly misunderstood. Mm-hmm. And I think about Texas Instruments and I think about Taiwan Semi, who are both by far first-in-class companies. And I see Taiwan Semiconductor spending a tremendous amount of Capex. Now, they're taking advantage of the tailwinds to grow, but they're largely doing it because they have to. If they're going to remain the most advanced semiconductor manufacturing company in the world, they have to spend the money that they've committed to spend. Texas Instruments similarly is spending money to grow, but the money that it's spending is also going to be growing its economic moats. Just one example is it's spending, at the same time it's expanding its capacity, it's increasing its wafer size, which is going to give it even increase, double, it's going to increase its cost advantages by double digits. So to kind of sum all of that up, I see Taiwan Semiconductor is just kind of keeping its edge, and Texas Instruments is sharpening its blade.
Mm-hmm. So I'm going to share a chart here to illustrate that, Jason. So Taiwan Semiconductor Manufacturing primarily manufactures digital chips. So those are the chips that process the zeros and ones that make up a long chain of data, and it means nothing to you and I. Texas Instruments, on the other hand, 3/4 of its revenue in the last quarter is analog chips. So analog chips have the ability to interact with a real-world signal. It might be speech, it might be video or an image, it might be a radio wave. It could be any number of things, but it's a real-world, actual, tangible signal that humans can also detect with our ears or our eyes or whatever. And that analog chip converts it into the digital signal that the chips Taiwan Semi manufactures. So like the smartphone chips, PC chips, customers ranging from Apple to AMD to NVIDIA and Qualcomm, you name it. So I provide that chart here to build on your point here about capital spending. What is it exactly about Texas Instruments' focus on analog chips that gives it kind of a bit more of an edge? Or specifically, what is the edge that they've created around those analog chips that Taiwan Semi doesn't have at this point?
So I think they both have it to some degree. I think that's really important. But I think the biggest key. So you think about Taiwan Semiconductor, right? They spend billions in capex. They roll in the latest ASML and other companies' machines to produce those leading edge, the most advanced semiconductors in the world at that time for about 2 years, right? And then wash, rinse, repeat. You have to continually stay ahead of that curve on the capital spending. To, again, that's the maintaining of that edge. Now, Texas Instruments, again, we talked about analog semiconductors. And again, this is the misunderstood part, I think. I think there's kind of two cohorts of misunderstanding. One is people hear analog and immediately assume it's the old technology that serves no real meaningful long-term purpose. You described it perfectly, and it kind of paraphrases what Texas Instruments says, is that analog semiconductors are how digital semiconductors communicate and interact with the real world. Things like power management, producing a signal that we can see and hear, like something kind of important, somebody presses the brakes in the car and the brake lights come on, things like that. Machines, industrial equipment, the digital semiconductor parsing all of that data and then deciding on an action. There's an analog semiconductor that actually causes those industrial machines to do whatever that action is, right? So deeply, deeply important as more devices become connected, as more devices have computers in them, controlling them, semiconductors, the proliferation of analog semiconductors is only going to grow. Now, we talked about Taiwan Semi kind of staying at the front of the technology curve and constantly having to resharpen its blade with that capital spending. Texas Instruments customers, by and large, in the industries it's really kind of focused on and built its moats in, they prioritize reliability, durability, and replaceability. Mm-hmm. If you have $1 million piece of capital equipment that you expect to run in your factory or provide some function in your business for 20 years, you can't just go spend another $1 million because a $200 semiconductor is no longer available from the manufacturer, right?
Right.
So the as a product of its focus, it's been able to, and this is part of like the second part of like the misconceptions, is the idea that it's just this commodity business. Mm-hmm. But it's built these massive moats around its commodity business because right now there's a line somewhere printing wafers that they designed 20 years ago, right? That they're still selling because there's economic demand. And as a result, as much as we talk about how Taiwan Semi, it would take, billions of dollars and multiple years being spent to kind of catch up to what it is, somebody could start doing that. Somebody could raise $25 billion and start building a mini Taiwan Semi just about at any time, and somebody would come to them, right? They may not have the same profitability and cost advantages, but there would be demand. It would be very hard for somebody to replicate what Taiwan or what Texas Instruments has built at any scale because of what it's established over the past 20 years and the moats that it's already built around it and the extreme cost advantages that it has that I don't think we necessarily appreciate enough.
Absolutely. And that addresses, I had two reasons for wanting to do this with you, Jason. The first was your tweet. The second, I've started to see, I hope I'd have never contributed to this, but I feel like I may have worded things at some point that were misconstrued. That point you said about them being a commoditized business. And I've seen, and that's true, a lot of these parts, like you said, they're very cheap, replaceable parts that go into machinery. But Texas Instruments does not gain its strength because it focuses on these commoditized parts that no one else is interested in. That's right. That's not true. Like you just said, there's plenty of people that would love to have 70% gross profit margins like Texas Instruments does, but they just can't touch it. This is
a company manufacturing a quote unquote commodity product, getting 70% gross margins on the manufacturing side, and actually over the past 3 years, superior operating margins over Taiwan Semiconductor. Nick, the one thing I want to really emphasize here, we've talked about like the durability and the replaceability part of it, which is central to its strategy. But I think we also have to acknowledge, we should acknowledge that this is a company that spends between $1.5 and $3 billion a year on research and development. It releases thousands of new products every year. And one of its other really powerful economic moats is its e-commerce business. Mm-hmm. And this is something that it's still only a few years into its existence, but the company has like 100,000 customers. I mean, just think about that. This is, a company that's it's not selling to Semiconductors R Us, right? Where people are coming in and buying them off of Semiconductor R Us's shelf. It's selling it directly to companies that are designing and manufacturing a product, and a small cohort of companies, of course, make up an outsized portion of that revenue. So you think about for Taiwan Semi is the same way, right? You've got the Apples and Nvidias that are huge customers for them, and it's similar for for Texas Instruments. But the differentiator is it's built this great e-commerce platform where if you're a small product developer, you're making a product, and you can't just pick up the phone and somebody at one of these big companies is going to answer and you can demand that price. It's really easy for you to get on their website and find the off-the-shelf product that's going to meet your needs. And if you are developing something that needs a newer technology that's more on that leading edge for the analog side, this is the company that's spending a ton of money to develop those products too.
Right. It's a unique business model because of the end markets it serves and growing end markets. So you've already mentioned automotive and all the fun stuff happening there with electrification, advanced driver assist. Someday, maybe, but I have my doubts, full autonomy, but then also robotics and industrials. Slapping that e-commerce business on top of it is a really, really good point, Jason, that I had not thought about for a while, and I have not seen anyone else mention either. It's a pretty powerful vertically integrated business. Taiwan Semi does not even have the ability to do that because customers, it doesn't serve small customers generally that can just order stuff off the shelf.
Right.
So maybe we can pivot here for a little bit. And I think this is an interesting point. So if we were able to bring the team at Berkshire Hathaway in with us, Jason, wouldn't that be a treat?
Me, you, Uncle Warren, Ted and Todd just sitting around drinking Cokes.
Yeah. And so you mentioned those two guys. Well, here's my question. Now I'm babbling and getting ahead of myself here. Berkshire Hathaway, Warren Buffett's giant investing conglomerate, bought Taiwan Semiconductor Manufacturing earlier in 2022, not Texas Instruments. Why not?
Right.
Why do you think that choice was made?
A couple of thoughts here, a couple of reasons. Number one, I think maybe kind of like Apple here, the initial Apple investment was brought to Warren, right? It was one of his lieutenants that made that initial investment. And then over time, Warren Buffett spent time with Tim Cook, got to understand the business and like its economic moats, like the brand power like Coca-Cola, right? That Apple has. And then of course, Warren became very, very, obviously very a strong believer in Apple as an investment. It's by far the biggest investment in the company. I don't think that this was a decision that Buffett had much involvement with. I'm sure he knew it's, billions. I think it was a $4 billion investment. Mm-hmm. So it's a sizable amount of money, but it's not substantial for Buffett or for Berkshire portfolio money. But I think kind of like with Apple and a lot of the other big investments that Berkshire tends to make in stock, it tends to be in large companies that have really large scale, that already have pretty substantial scale and really big addressable markets. And Taiwan Semi, I think, certainly has that over Texas Instruments, right? The reality is that the silicon that it makes is a bigger market and it's bigger dollars. And there's a tremendous amount to like. But I think the other part of it too, Nick, is sometimes we forget, like with these the way we find out about these, the SEC filing is done 45 days after the end of the quarter that it happened. So it could be like 4.5 months before we actually find out when it happened. So that purchase happened sometime between like, I don't know, July and September of last year. And if you look at Taiwan Semiconductor stock, it was down like 40% from the high at that time. And Texas Instruments wasn't quite the same value. And again, I don't think they were even like, well, which one of these do we buy? I don't think that was even like a conversation. I don't even know that like a single synapse even fired over that. I also don't think they were anchoring on that 40% decline, but they were looking at the large company. They were looking at the valuation. They were looking at its moats and the fact that it kind of checked off all those markets. And it made sense. I think it made sense. And I support their decision. I do.
Yeah, it introduces something brand new to the Berkshire portfolio. So now I actually forgot to mention, I have no horse in this race. I don't own TSM or TXN directly, but I do now own Taiwan Semi via my Berkshire Hathaway holding. One other thing here that I think is maybe possible, maybe it swayed the team at Berkshire. So 40% of their portfolio is Apple, which is astounding that the Berkshire Hathaway empire has 40% of its money in Apple at this point.
Berkshire has never spent this many dollars on a single stock before. It's had an acquisition that was bigger, but it's one of its largest acquisitions ever. Yeah.
It's really mind-boggling. With such a huge stake on that, though, I have to think at some point maybe they were looking for possible ways they could hedge. And because Apple is so tied at the hip with Taiwan Semi at this point, every iPhone advancement that comes out every year, you can thank Taiwan Semi for. Right. If TSM ceases to exist, we're going back a few years on iPhone models. So probably not the primary reason, but perhaps that was a reasoning for adding Taiwan Semi into the mix. They were going to pass some cost increases onto Apple for some of these newer chips.
Well, and we saw Taiwan Semi certainly has pricing power. I guess it's a little over a year ago now that it raised prices by double digits, and there wasn't a big blowback from its customers.
No, where are you going to go?
Right.
Who else you go to?
Right, a competitor. That's who you're going to go to.
That's probably not going to do as good a job, but
right.
All right. So a lot of reasons here why, despite Berkshire Hathaway's decision last summer, probably Texas Instruments, you could definitely make the case as the stronger company. But let's not take too much away from Taiwan Semi. Great company. What exactly gives Taiwan Semi its strength, its power, its edge? Because if I understand it correctly, Jason, you actually own both stocks, right? You own Texas Instruments and Taiwan Semi.
I do. And the interesting thing is I actually own more Taiwan Semiconductor than I do Texas Instruments. And part of that is because, like Berkshire, I took advantage of some of the opportunity the market has given us. I followed Taiwan Semi for 4 or 5 years, and frankly, I struggled. This is one of the few ones that I got right. I struggled with the valuation, and as it came down, I relatively aggressively built out a position. I've only more recently started to do the same thing with Texas Instruments. And again, I think that a lot of its capital investments are necessary to stay ahead of it. If it's not going to spend this money to stay ahead, Samsung will. Intel will eventually get out of their own way and figure out how to stand up a contract manufacturing business if Taiwan Semiconductor is not staying at the front of the edge. But I bring up those two specifically because that's really Taiwan Semi's secret sauce. Mm-hmm. Its customers absolutely know that they will never, ever compete with Taiwan Semiconductor. If you're not having the most advanced chips made by Taiwan Semi, Samsung's really about your only choice, right?
Mm-hmm.
Other choice out there to do it at scale. But you know what? If you're making a smartphone, Samsung makes smartphones. If you're making a TV, Samsung makes TVs. If you're making a appliance, if you're making any consumer electronics device, and you're going to Samsung for your chips, you're going to your competitor, right? And this is also the thing that I think Intel is going to have to work really hard to prove that it can actually stand up a business to manufacture for customers, build an entire customer support organization from the ground up, and completely wall it off from its vertically integrated semiconductor business to have any chance of really competing. And I've kind of turned, honestly, the past year from being optimistic that Pat Gelsinger can do that to not sure that shareholders are going to give him enough time to do it. But it always comes back again to that economic moat with Taiwan Semi, is they built this business from the ground up to make semiconductors for everybody else and never compete against its customers. And there is a massive amount of value to that has brought everybody to them. And that's resulted in like network effect strengths where you go to them and it helps you when your competitor goes to them too, because it drives everybody's costs down and lifts everybody up and, you know, helps add to the bottom line for Taiwan Semiconductor.
Yeah, it is an incredible business model. You'll even see this sometimes when fabless semiconductors talk about merging with each other. They'll talk about synergy, and oftentimes we think synergy means, oh, you're firing people.
Right.
Awesome. But oftentimes what they mean is synergy because they can combine their chips together. When they go to a Taiwan Semiconductor, they get the bigger order, and so it drives down their unit cost.
That's the key, right? I want to sit on that for a second, Nick, because let's just talk about just plain old manufacturing 101, because that's really, as much as we love the tech and we talk about their advance and all that stuff, if you want to make money as a manufacturer, you have to do two things really well. Number one, you have to get your fixed costs as low as you possibly can. And then you have to maximize the throughput of every line that you have. Right. And that's what Nick's talking about here. As a manufacturer, I have to sell X number of products just to cover my expenses. And then every dollar above that I get, maybe the first $100 I get, I don't know, maybe $50 of pure profit. And then after that $100, every $100 on top of that, maybe it's $80 of pure profit. It's operating leverage, and it is so important for these kinds of businesses. And that's what they've built, is a business that really maximizes operating leverage at scale in semiconductor manufacturing. Yeah,
it's an excellent point, Jason. So in a lot of ways, you know, Taiwan Semiconductor is still maybe trying to get to that point that Texas Instruments has already achieved, where in some ways that moat they've built around their manufacturing process and the relationship they have with their clients is untouchable.
Yeah.
Because as you said, it's not an ideal relationship to have manufacturing done via Samsung or Intel if they could also compete against you.
Yeah,
but
no, I think that's fair. I think one thing that's worth mentioning too is I think the reality is that, again, because, and this just is one of those things that happened because of what they're focusing on. The reality is that I don't think Taiwan Semi is ever going to have that long tail moat, just because the life cycle value of digital semiconductors it's not going to be 20 years. It's not going to be there, and that's okay, right? But it does, to me, just add to the economic power of Texas Instruments.
Yeah, absolutely. Let's delve into that a little bit more. We have this point here just to kind of share some, well, you've got operating margins comparison between Texas Instruments and Taiwan Semi. You also have free cash flow per share, which is a fantastic metric very few investors talk about, and we really should talk about it with every business.
The most important metric as an
manufacturing.
investor to follow is operating cash flow and free cash flow.
Absolutely. Free cash flow per share, especially, I think, even in this particular point, small point in time where we've grown hyper focused on stock-based compensation, focusing on free cash flow on a per share basis,
Right.
can help factor for that problem because of the dilution from stock-based comp. Different topic. But Jason, you've got these charts here doing the side-by-side comparison, and it's impressive. It really kind of bolsters the point you're making for Texas Instruments here. Walk me through this.
So what I did with the data is I went back to when Rich Templeton became CEO in 2004, and I spent like the 2 or 3 years before that. He was the chief operating officer, so he was already kind of helping point the company in the direction that it's gone. But I just thought it was really interesting to look at how operating margins and profit margin, right? So net margin, what's left over at the end, has consistently increased over that 18 years. And it's just remarkable. And what you see that's interesting is that for both operating margin in probably 2017 or 2018, Texas Instruments operating margins actually surpassed Taiwan Semi, which have been relatively flat. I want to say that that's not a bad thing, because if you're manufacturing semiconductors and you're able to keep pretty flat, really high margins above 30%, you're doing very good, right? But Texas Instruments has been able to grow its margins, which I think is really important. And it's been able to really stay lean, even as it's still spending on things like R&D, to pass a lot of that onto its net profits, which I think is really important. But like you said, cash is really king. There's lots of ways you can kind of torture the numbers to get them to say what you want when you're looking at things like earnings per share and net income. Cash is a little harder to fake. And if you look at over that same period, Texas Instruments has grown its cash flows on a per share basis 836%. Taiwan Semis hasn't been too shabby. It's increased its free cash flow per share like 419%, right? Both have done incredible. Texas Instruments lapped Taiwan Semi, which is stunning if you think about.
It is stunning.
If you think about what it's been able to do.
And I'll point out here too, Jason, because some might point to this and say something like, well, Texas Instruments was kind of in sore straits after the dot-com bubble when Rich Templeton took over. But Taiwan Semi was like this unheard of company. No one cared about Taiwan Semiconductor Manufacturing in 2004. So I think
this is 18 years, right? This is 18 years. I think that's the point, is that over 18 years, lots of things happen, lots of economic conditions occur. And to do that for almost 2 decades is just absolutely remarkable.
It is.
Can we talk about capital spending?
Yes. Yes, that ties into this because if you want free cash flow, you have to talk about capital spending.
You do. So defining free cash flow is cash from operations, so meaning it's the money left over after you've paid for everything to run your business, the cost of goods sold, your home office expenses, marketing, R&D, all that stuff is paid. All your taxes, interest on debt, all that stuff's paid. That's operating cash flow. Now you've got to spend capital. You've got to buy machines. You got to increase your factory size, all that stuff. That's not an operating expense. That's a capital expense. So you subtract that from cash from operations, and what's left over is free cash. It's the cash that's free to do with as you will. And here's the thing. Both of these companies have been relatively aggressive with their Capex, as they need to be, because again, they're still technology-focused manufacturers. You have to kind of stay on that front edge. Now, what was really compelling to me as I've done the research over the past couple of years is back in 2019, I think it was, Taiwan Semi went to its shareholders and said, we are going to aggressively increase our capital spending. We are kind of at a formative moment in the semiconductor industry, where over the next decade, there is going to be a massive explosion in demand. Part of the way we need to fund that is by cutting our dividend, and cut the dividend 68%. So more than 2/3 cut the dividend. And over that period from like the beginning of 2018, Taiwan Semi's capital expenditures have increased about threefold. They're up 231%. So it's a little more than a triple. Now, over that same period, Texas Instruments capital expenditures have increased fourfold. They're up 300%. Here's the key, Nick. Texas Instruments has also doubled its dividend over that period. Taiwan Semi cut its dividend to help pay for it.
Not to mention the share buybacks along the way, which we know Rich Templeton, big fan of taking whatever's left over after the dividend and repurchasing stock with it.
Yeah.
Very shareholder friendly business here.
Bought back more than half the company since he became CEO.
Yeah. Amazing track record with that. Again, the more I look at this, the more I think you're right, Jason. Taiwan Semi would love to become, but maybe not be able to become what Texas Instruments is today. So I still have, let's final takeaways here. You've presented me with a few points here, Jason, that make me think I should maybe get some exposure to Texas Instruments because I already have TSM via my Berkshire stock. Have you convinced yourself you're absolutely right? Texas Instruments, better than Taiwan Semi, and maybe just one of the best, most efficiently run semiconductor manufacturing businesses there is, period.
I would say we don't even have to include the word semiconductor in that statement. One of the best, most well-run economic powerhouse manufacturers in the world, period. And certainly in the top tier in the semiconductor industry. Probably the most important thing I want to stress here is that the beauty of investing is you don't have to pick the horse that's going to win the race. You get to ride more than one horse.
Right.
And this is nothing to be detrimental of Taiwan Semiconductor. I think these are the two manufacturers that are the most important in terms of actually making the silicon. I think they're the two that are most important now, likely to remain that way. And both have good histories of generating good economic returns. I just think Taiwan Semi, the Texas Instruments, the evidence is abundantly clear that it has been the better generator of economic returns for investors, and the moats that it has built are likely to continue to strengthen over time, and investors would do well to make it part of their portfolio.
I agree. I have some qualms and hangups that we should probably reserve for a different conversation. But some of those hangups go out more than 5 years down the road. Yeah. I get nervous whenever there's a lot of government funding getting funneled into an industry, right? Like the U.S. CHIPS Act. I'm also nervous about things like silicon carbide or gallium nitride, which is kind of a newer, different material than silicon that Texas Instruments doesn't play in. But like I said, maybe a different conversation. And those hangups aside, those qualms aside, I don't think it at all detracts from your bold talk, Jason.
I appreciate that. I'm glad that you now have the zeal of the newly converted. Nick, welcome to the cult.
All right. Jason, I really appreciate you coming on. I think this conversation, it's been, of course, really helpful to me. So like I said at the outset, that's a win as far as I'm concerned. But I think a lot of investors that follow this space closely and are looking for a way to profit off of major technology trends in the coming decade, I think they're going to find this helpful as well. Jason, remind the folks at home where they can find you.
So if you look for me on Twitter, I'm at The Smattering. If you find me on Twitter, then from there you can find the podcast. It's The Smattering Podcast. Wherever you get podcasts, it's easy to find. We also have a YouTube channel, It's the Smattering podcasts and videos. Like I said, you can find links for all this stuff. If you find me on Twitter, then you can find the links for all the other fun stuff that I do.
And it's good stuff. So check it out. We'll be back with more good stuff on semiconductor investing.